time, India's daily coronavirus count is over 40,000 according to data from the Union Health Ministry.
An unknown virus has changed the world as we knew it. It shut down factories, grounded airlines, confined us to our homes, and brought business to a standstill.
यही रास्ता है आत्मनिर्भर भारत.
As India gets back on its feet, can the union budget give wings to the recovery?
Pandemic, investors,
industry, economic growth,
Stock market,
deficits,
infrastructure, aviation,
interest rate, revenue, the tax department, the revenue department.
Growth needs a leg up, but fiscal deficit can't get out of hand. How will the finance minister perform a balancing act?
A budget which is a budget like never before in a way. 100 years of India wouldn't have seen a budget being made post-pandemic like this.
A budget like never before. But your destination for the big day remains the same. The budget coverage on CNBC-TV18 starts right now.
Good morning. Welcome to your budget headquarters. The big day has finally arrived.
So let's get straight down to what's important in this budget. Ask our editors to prep us for the day right away. Well, it is the big budget morning. All eyes will be on Finance Minister Nirmala Sitharaman as she rises to present Budget 2021. There is hope and there's some amount of fear and trepidation as well. Let's talk about the hope. Prime Minister Modi at the start of the budget session came out and said that the Finance Minister's already delivered 3 or 4 mini budgets and hence this budget should be seen as a continuation of the measures announced. But cut to the economic survey, the chief economic advisor making a pitch for more stimulus. Continue active counter-cyclical fiscal policies. That's the message running through the economic survey. In fact, the CEA in his conversation with us saying that the Dravid-like innings is perhaps past and it's now time to send in Pant and Pujara. Will that mean accelerated stimulus is the question. What seems like a done deal is the Development Finance Institution to try and push the infra story. The government has already decided to move a bill to set up the NABFID. Many would argue that this is old wine in new bottle and perhaps this may not be such a game-changing idea, but nevertheless, this looks like it is a done deal as part of Budget 2021. Will the government move on taxes to try and fill that? How much is the big question. There is the possibility of a hike in the education and health cess. What was being discussed was 0.5 to 5%, but let's see if that goes through. A change in the STT regime. Again, this is a fear of the markets. Our poll, remember, most people seem to believe that the government would not go down that road. So again, as I said, it's a fear, it's an apprehension.
So let's look at the big numbers that the budget will bring forth. One expectation, of course, is already out of the way, and that is the GDP number. Ultimately, your taxes grow when your GDP grows. So we have to first get the GDP number out of the way. And the GDP number, the survey itself told us that they will assume a 15.4%. Look, we are talking about nominal GDP. So this is real GDP plus inflation. Most of the economists we polled also said 13 to 17%. So this 15.4% has been grabbed with both hands. Nobody thinks it is an overestimation.
Well, the market for starters has corrected about 7.5%. So it's going into the budget with some bit of fears, which may not necessarily be the worst thing. But let's do one thing. Let's first say what the market wants, and then we'll discuss what the market does not want. What the market wants. Simple, a growth-oriented budget in which you raise resources without raising taxes. Sounds simple, right? But that's what the market wants. Now, the number one focus, and Lata, you already mentioned that, has to be on infrastructure investment. That is the biggest investment that the market wants. Don't raise taxes. I think taxes kill bull markets, and that's why the market does not want any hike in long-term capital gains tax, not in the number and not in the holding period. That's something the market does not want.
This year, expectations on the tax front are quite muted. But there are some, and I've divided these into 3 sections: personal, corporate, and capital gains. I'm only going to talk about the big ones here and leave out the small tinkering or implementation measures which find a place in the budget, any budget. Let's start with personal income taxes, right? If the government wants to keep its fiscal deficit under control, there is very little room to forego any revenue. On the other hand, we may see increases, tax increases. It's widely expected that health and education cess, which stands at 4%, may be hiked. And the top income earners may have to pay more in taxes, people who earn more than 2 crores and 5 crores. One specific ask has been to make the leave travel allowance more attractive and easier to avail. This also in a way benefits the hospitality, aviation sectors, etc.
All right, the big thing to watch in this budget will be if the government decides to set up a bad bank or decides to unveil a path to privatization of public sector banks. If that comes through, then it will be positive for Yes Bank, IDBI Bank, Central Bank of India, Punjab National Bank and Bank of India. The other space, of course, would be the cigarette space. If there's any kind of taxes unveiled on cigarettes, then it could be negative for ITC and Godfrey Phillips. But the big push may come through on infrastructure, an establishment of a development finance institution for long-term financing, a higher fund allocation to achieve the Bharatmala program targets. All of that could be positive for infrastructure names like L&T, IRB Infra, Dilip Bilkon, Ashoka Bilkon and the likes.
India and abroad are going to be live on CNBC-TV18 throughout the day today to analyze every aspect of the budget. The veterans of D Street, our market masters, Ramdev Agarwal, the two Nilesh Shahs, Nirmal Jain, IIFL, Ashok Wadhwa, Aditya Narain, Madhu Kela, Manishi Roy Chaudhary, Sandeep Bhatia, Ajay Srivastava, Vetri Subramaniam, Rahul Chadda, Saurabh Mukherjee. All of them, anyone who is someone in the markets, are all going to join us to analyze various aspects of the budget.
Okay, we also have a big all-star lineup of the influential foreign investor voices like Mark Mobius, Arvind Sanger, Rana Gupta, Dominic Bokor-Ingram, Caesar Masri, Brian Jacobson, Krishna Kumar and Mixo Das.
And India Inc. will also show up in full force to rate and analyze the budget impact. Deepak Parekh, Uday Kotak, TV Narendran, Dinesh Kumar Khara, SBI Chairman, Sheshagiri Rao, Sanjeev Bajaj, Arundhati Bhattacharya and Kaushik Chatterjee, among others, are going to be joining us through the day just after the budget speech is over.
Not just that, political and policy heavyweights like Amitabh Kant, as well as a panel of secretaries, the DEA Secretary Tarun Bajaj, the Expenditure Secretary TV Somanathan, and Debashish Panda of the Department of Financial Services will be with us. We'll also have the Chief Economic Advisor K. Subramanian, Principal Economic Advisor Sanjeev Sanyal, as well as the DIPAM Secretary Tuhin Kanta Pandey, who will share the political agenda and lay threadbare the reasoning behind the budget.
Top-notch economists Sajid Chinoy, Jahangir Aziz, Sonal Verma, Samiran Chakrabarti, Neeraj Gambhir and Taimur Beg will be analysing the various macro numbers.
And the tax angle, as always, will be handled by veterans Dinesh Kanabar, Sudhir Kapadia and Rajiv Dimri.
Fiscal year, it went up 21%, and the third quarter, we're expecting it to be 10.5%. The reason why all of this is happening is because, again, we don't know the reasons why it's happening, but India is one country that's managed to break the link between mobility and infection, and because in the third quarter, the government, there's going to be a cyclical recovery and revenue. Let it happen.
Just before going to the budget, or because of the fall, are you buying anything?
Not yet, because we're pretty fully invested, but we are looking at, if this sell-off continues a little more, we would be buyers. We think that opportunities are opening up in some of the stocks that we've had an eye on that ran away from us. And by the way, I think 4 public sector companies in many sectors is 4 companies too many, but that's my point of view.
It's one too many. Okay, fair point. What is worrying, something which we were ignoring so far, about $1 billion have moved out of India in just last week. And we realized over the weekend, people tweeting from Korea saying that South Korea has seen more outflows than it saw in March and than it saw in 2008. So, it looks like the risk-off is not to be taken lightly. What do you think?
I think it should be taken lightly. I don't think that unless there is a fundamental turn in the COVID data, otherwise, I think this is just a tempest in a teacup. You are not going to have a straight line from here to the end of the year. But I think the economic fundamentals and the COVID fundamentals in India look headed in the right direction. And this temporary sell-off, in my opinion, will represent a buying opportunity, unless I'm completely wrong about global growth which would imply, again, being wrong about COVID.
Mixo Das of JP Morgan is with us, and in a bit, Krishna Kumar, the investment director at Eastspring Investments, will also be with us. Rana Gupta of Manulife also will be with us. Okay, they are with us. Gentlemen, good morning, and thank you very much for joining us this early. Mixo, let me start with you. How worried should we be about this global deflation in equity prices? Is it just something that will pass, or will it spoil our plans?
Yeah, so I think this has been a very critical issue over the past week, right? The volatility that you've been seeing in the US market.
Do you think some of these global players like Tata Motors will continue to surprise on the upside?
Well, I think Tata Motors' surprise is essentially driven by what's happening in the domestic business, and therefore it's not so much a global business thing. I would expect Maruti to come in much more strongly in the next couple of months. I think the product portfolio of Maruti is still much stronger. We could see Tata Motors continue to perform for the next 6 months or so. But if Maruti continues to have the loss of market share which has recently experienced, then probably in some of the categories where it is showing decreasing market share, Maruti will come through.
Now let's take a look at what the world wants to hear from the finance minister. Here's some opinion coming in from Caesar Mastery of Goldman Sachs on his India and global market outlook. Take a look.
Our outlook this year does call for emerging market outperformance and some dollar weakness. And that's true if you look at our equity forecasts in general, a little bit higher across EM than in DM. In fixed income markets, credit we think has a better return in EM than in DM. And obviously, if the dollar is weakening, that means EM currencies are probably gaining.
Well, but the person we should be hearing is someone from North Block itself. So here we have lined up the key words we got from the Chief Economic Advisor, Krishnamurthy Subramaniam. Shireen spoke to him on Saturday, and we picked up the nuggets which could be pointers to what we may get from the budget. Listen in.
As we quote Rabindranath Tagore, Gurudev Rabindranath Tagore, about a mind without fear. So when there is a biased measure, and there's a large literature that has highlighted this, and which is also reflected in the fact that none of the markets, whether it's equity, foreign exchange, or fixed income markets, react that much. Therefore, India's fiscal policy must be focused on doing what is necessary, which is basically focusing on growth, getting back the growth path.
The first rates and the markets are opening with a bang, you must say. 1% higher on all the big indexes, Sensex and Nifty, and the Nifty Bank roaring with a 1.5% gain, courtesy ICICI Bank, I would assume. Yes, ICICI Bank is up about 4%. IDBI is up 4%, but that's not going to make a big difference for the Bank Nifty. And IndusInd Bank is up 2.5%. So both those have yanked up. HDFC Bank is chipping in with a very decent 2% in terms of gains.
We have an exclusive CII panel lined up on the other side, where we will be in conversation with the best and brightest minds of India Inc., President-designate TV Narendran, the chairman of Hero Enterprise. Well, less than 30 minutes to go for the Finance Minister Nirmala Sitharaman to deliver Budget 2021. As all things in COVID times, what we are doing here at the CII headquarters in association with the industry chamber is a little bit of a hybrid model. So I've got some guests like Rajiv Memani who are here with me in the studio and some who are joining us online. TV Narendran, many thanks for joining us. As I pointed out, less than 30 minutes to go. If there is one priority that you would like the Finance Minister to deliver on, I know that the list of expectations is long.
The private investments will come in when there are two factors facilitating it, in addition to what the government can do. One is, of course, growth in demand.
We have someone here who has watched a lot of budgets and reactions of markets and investors, more importantly. Reaction of investors more important than markets, and that's Ramdev Agarwal, Chairman Motilal Oswal. He's just joined us.
If you have a divestment target of say 2 trillion rupees or 2 lakh crores, I mean, you should actually end up executing that, because if you don't do that, then what happens is the expenditure becomes, first thing is that most of the divestments, if at all anything happens, it happens very back end.
You can see that members, officials in the Parliament are rising to meet the Speaker, and the Speaker is about to take the floor. So it's over to the Lok Sabha.
I present the budget for the year 2021-2022. As introduction, Honorable Speaker, the preparation of this budget was undertaken in circumstances like never before. We knew of calamities that have affected a country or a region within a country. But what we have endured with COVID-19 through 2020 is sui generis. When I presented the budget 2020-2021, we could not have imagined that the global economy, already in throes of a slowdown, would be pushed into an unprecedented contraction. We could not have also imagined then that our people, as those in other countries, would have to endure the loss of near and dear ones and suffer hardships brought about due to a health crisis. The Pradhan Mantri Garib Kalyan Yojana, the 3 Atmanirbhar packages and announcements made later were like 5 mini budgets in themselves. The Atmanirbhar packages accelerated our pace of structural reforms, redefinition of MSMEs, commercialization of the mining sector, agriculture and labor reforms, privatization of public sector undertakings, one nation, one ration card, production-linked incentive schemes are some of the notable reforms carried out during this period. Faceless income tax assessment, DBT, and financial inclusion are the others. I want to take a moment to acknowledge how isolating and distancing seemed like insurmountable challenges for a country like ours that has people coming together in times of crisis. It hurts us in many ways. It hurt us in many ways. I bow my head in respect to every citizen for the endurance shown in facing what was an undeniably a tough year for all our physical and mental well-being. Its 5 regional branches and 20 metropolitan health surveillance units. Expansion of the integrated health information portal to all states and UTs to connect all public health labs. Operationalization of 17 new public health units and strengthening of 33 existing public health units at points of entry, that is, at 32 airports, 11 seaports, and 7 land crossings. I have provided a sum of 20,000 crore rupees to capitalize this institution. The ambition is to have a lending portfolio of at least 5 lakh crores for this DFI within 3 years' time. To further extend our efforts towards the unorganized labor force, migrant workers in particular, I propose to launch a portal that will collect relevant information on gig workers, building and construction workers, among others. This will help formulate health, housing, skill, insurance credit, and food schemes for all migrant workers. We will conclude a process that began 20 years ago with the implementation of the 4 labor codes. For the first time globally, social security benefits will be extended to gig and platform workers. When we continue our endeavor with renewed vigor, we shall reduce compliance burden on our senior citizens who are 75 years of age and above. For senior citizens who only have pension and interest income, I propose exemption from filing their income tax returns. I propose to allow tax exemption for notified affordable rental housing projects. Tax incentives to IFSC. As I mentioned in Part A of the speech, the government is committed to making the International Financial Services Center in GIFT City a global financial hub. In addition to the tax incentives already provided, I propose to include, among others, tax holiday for capital gains for aircraft leasing companies.
Now it looks like it's going to be at least 12 lakh crore of gross borrowing and net borrowing about 9.5 lakh crore. So clearly at least a couple of lakh crores are coming from borrowing, and that's why bond yields are up by about 10 basis points. But that's okay, par for the course.
You know, 10 basis point doesn't bother us. But what is very critical is in this bill, in this session, they are putting the privatization of this investment of LIC. Now, if you see LIC, 10% disinvestment can get them 10 lakh crores approximately, 10-20% either way. So the amount of money they can raise by divesting LIC, only 10%, is such a large amount that it can take care of the increased expenditure and capex which they're talking about.
I think it would be 1 lakh crore, Mr. Parekh, you know, because they've overall budgeted for 1.75 lakh crore from disinvestment this year.
Almost all the economists we polled had a GDP between 225 trillion and 229 trillion. So 222 is an underestimation, just as this year's 194 is also definitely likely to be an underestimation. We may end up with 197, going by the kind of PMI numbers we are getting and tax numbers we are getting. Likewise, even tax, 14% is what they've assumed, which means they've assumed a GDP growth of 14% nominal and therefore a tax growth of 14%. As Ramdev was saying, we must assume a buoyancy at a time like this.
Saurabh Mukherjee is joining us. Saurabh, the Sensex is up 2,300 points. The Bank Nifty is up 2,500 points. I have not seen this kind of reaction in the past. What are your thoughts?
Look for companies who have proven themselves to be judicious long-term capital allocators. So in banking, beyond our long-standing favorites, HDFC Bank, Kotak Bank, we have Axis Bank in some of our portfolios. We have AU Small Finance Bank in some of our portfolios. We're looking for companies who are well-run because we realize that it is an exciting time. The economy is recovering. The government has taken a bold expansionist budget. But exactly when everybody else is jumping for joy and getting excited,
LIC to have IPO, insurance sector to have more in terms of opening up for 74% for FDI. These are very clearly steps, progressive steps in financial sector. Other than that, one major cry of all the banks have been the NPAs, for which we have been repeatedly giving capital infusion. In order that the bank books are cleared and cleaned up, we have come with an announcement of a formulation through which the NPAs will be culled out of the bank's books based on some formulation, not any discretion there. It goes to a holding company like structure, which after doing the necessary, sprucing up and also cleaning up and weeding out problems of that particular asset, will be through an open process attract asset reconstruction companies which can come and bid for those assets. We have spent, and we have spent.
Budget 2021 goes for growth, leaves taxes untouched, targets big capital expenditure and announces a bank privatization program. Finance Minister Nirmala Sitharaman had promised a budget like never before. And today, when she delivered her third budget speech, she fueled a rally on Dalal Street, which has never been seen before. The market has given a big thumbs up to the union budget, clocking the best budget day gains in history. In fact, in a matter of hours before, the Bombay Stock Exchange added market caps to the tune of over 6.5 lakh crore rupees, and it is now at an all-time high.
Niti Aayog has been initiating and steering the asset monetization as well as divestment. Now a new list has to be prepared by Niti Aayog. What will be the parameters and how soon do we expect that new list for divestment and asset sale?
I mean, before I answer that question, I must say that I'm so pleased to see such a big thrust on non-tax resource mobilization.
The good news is that there hasn't been anything, there hasn't been a hike in surcharge, there's been no additional burden which was anticipated, no change in long-term capital gains, etc. But what has happened is the agri-infra cess, and it's across a whole bunch of specific items. If you can explain the rationale behind that, and when you say that it's not going to impact the consumer, what is the case for that?
See, in this budget, if you see, there is no major change in the tax structure, but then the tax process has been simplified.
This is the time to spend, and this is the time for countries to take action in fiscal policy push.
I think you preambled the question very well, Sherin, on that context. We continue to engage
that could have been announced, but didn't come through.
Certainly this use of technology and this exchange of information of the expenditure of the future so that we get more value for the money that we have. A lot of regulatory issues that have settled, a lot of experience that been gained.
Good evening. I have with me India's Finance Minister Nirmala Sitharaman in an exclusive interview with Network 18, the first that she is giving to a private channel after her budget speech. Nirmala ji, it has been a really, really tough year for you, but I think you have every reason to smile today. As I was saying, the Sensex has really bounced 2,200 points. Did you really expect this, and how do you feel?
I hope the intention of 2 or 3 major points which have come across in the budget is well understood and well received. And if it is being received, I'll be happy, because after all, we want the country to understand the intent of this government.
This budget is going to accelerate the growth in the country, and the most important feature of this budget is the maximum priority for infrastructure development. And for the road sector, already the budget is increased from 91,000 crore to 1,18,000 crore.
What does India Inc. make of the budget? I'm joined by the captains of corporate India and one of the key architects of the budget team, Sanjeev Sanyal, the principal economic advisor, joining us on the CNBC-TV18 CII Town Hall. Zareen Darawala, the cluster CEO of India and South Asia Markets at Standard Chartered, TV Narendran, the president-designate of CII and the MD and CEO of Tata Steel, Vinayak Chatterjee, chairman Feedback Infra, Kiran Mazumdar-Shaw, executive chairperson Biocon, Baba Kalyani, the chairman and MD of Bharat Forge, Pavan Goenka, MD and CEO of M&M, Rajiv Memani, the chairman and CEO of EY India, Chandrajit Banerjee, the director general of CII, and Vipin Sondi, the MD and CEO of Ashok Leyland.
Well, of course, I think it's a very, very encouraging budget that will go a long way in terms of supporting the economic activity, revival of economy.
Start by saying that the government has very credit to getting a transparent budget.
Over fiscal freedom. How do you read it?
Look, I think that is a fantastic thing. Pretty consistent, very directed, very strategic.